So many different things to talk to you about in terms of the portfolio. It's funny, we started a year ago, the same place I'm going to start now, which is Sirius, which has been doing very well. I know you'll point out, but there's always that discount.
I don't have to. You're doing it for me. Thank you, David.
I know. There's always that discount, and you guys continue to buy back shares of the tracker.
Yep.
You're at 71.5%. Are you just going to keep buying it back?
Well, two things are happening. You noted Sirius is buying its shares back, and actually, we today are issuing exchangeable into Sirius stock, and they're actually buying the underlying shares for the hedge fund buyers who are hedging the stock out. So they're continuing to buy back. That's pushing our 71.5% or something up. But in addition, as you rightly noted, our tracking stock trades at a discount. We bought back through the end of the quarter $860 million of the stock. We have about a $350 million profit if you look at the underlying Sirius shares. So we like that. We own about $22 billion worth of Sirius stock, and the cumulative or the absolute discount's about $6 billion. So we're going to keep attacking that and buying that. If the market's going to give us the Liberty shares, SXM shares cheap, we're going to buy them back.
But it has. It persists. It doesn't seem to go away.
Thank you. Just keep passing.
Do you wonder why, though?
I think we've talked about it. You know, Siri has more share buyback. It's a harder borrow against the Liberty Siri to arb it out, and a bunch of things like that. But we just take advantage of it. We try.
You're chairman of Sirius still as well.
I am.
So let's talk a bit more about the business itself. Everybody wants to talk about podcasting now. I mean, even Daniel Ek joined us on set 6 months ago to talk about Spotify's efforts when it comes to that. They're spending a lot of money. You guys are moving into it at Sirius. At Sirius.
Pandora is big in it.
What does it look like in terms of the spending going on? I mean, some people want to equate it to the streaming wars right now in terms of the spending on content and the profitability that it will bring.
Well, as you know, we have our Investor Day going on, and I usually try and give a think piece. Last year's think piece was why the video scripted content business is a horrible business.
Okay.
This year's was why the audio business is not like that. Not only is there upside in viewers, in listenership, and the kinds of content, including podcasts, but they're under-monetized. I think there's an opportunity to see increases in how podcasts and other forms of audio content are monetized. But to your point, the cost structure is way more attractive. Yes, there's a little bit of a bidding war for audio content, but you can't spend on audio. A great podcast might be $250,000 a year. An hour of one of these high-end shows could be $10 million.
Oh, yeah.
So the numbers are so far apart, and the war is way less. And the good news for us is we're a serious player in audio.
Yes, you absolutely are. So has the music sort of become almost a commodity at this point, and the differentiator is the podcast?
Well, I think your point is right. Exclusives are what you want to have, and there are different forms of that. We have exclusives, obviously, in things like Howard Stern. We have exclusives in the fact that you want to listen to CNBC in the car. We're the way to do it, ESPN and the like. But you're right, podcasts are going to piece of that, and more. We've got an exclusive with Marvel. We have an exclusive now with LeBron James called Uninterrupted. Lots of things which are unique just to us.
I don't want to steal all of Jim Meyer's thunder because he's going to join us as well, the CEO of Sirius. So move on to some of the other parts of the portfolio. One that hasn't been as good, TripAdvisor.
Yep.
I was talking to Malone about this as well. Google changes their algorithm, and suddenly everybody's discombobulated. What can you tell investors there in terms of the hotel click-based auction system not working as well as it has, experiences not growing as quickly, and what your expectations are for Trip to turn it around?
Well, I think a couple things are happening. Trip has always had an enormous audience of interested people who want to travel. Historically, our best monetization method was that hotel auction, as you point out. Google's made that a lot harder. Why? They've pushed free search results down the page, particularly as you went from desktop to mobile, and they put their own travel on top, so we're competing with them directly. And that has happened. You've seen that reduced results, therefore, for everybody, the OTAs and people like ourselves. But we've seen growth in other forms. We've seen growth in our direct advertising business. We've seen growth in our restaurants and our experiences business. And yes, there's competition in that space, but we're growing nicely there. And, despite the challenges, we have a great strength in the view audience, and we have great strength in how much free cash flow that business is still generating.
Should it be viewed more as a free cash flow generating business as opposed to a growth business at this point?
I think that's, we have growth in certain aspects, but we're going to fight challenges in the auction market.
You expect that to continue, I would.
Yeah, I don't think Google's going away. I mean, I'd like to see the government do something about them, but I'm not sure I'm counting on that.
Because the platform is so powerful, and changes like that can just take billions and billions of market cap away from Expedia, Trip, and
the platform is their platform, and now they're putting their app on top. When I was at Microsoft, we went through this. I know, the government, if they get to be involved, would be a different matter.
Right, and particularly, again, I think it's important, you made this point, but you're doing it on this now as opposed to your desktop, so you just don't have the room.
Screen space, right? A lot smaller, exactly.
Formula One.
Yeah.
What can you tell us there in terms of what investors should look for the year ahead that's going to continue to add value at the company?
Well, Chase Carey just spoke, and he made the great points. We invested, when we bought this business in 2017, we invested in a whole bunch of initiatives around marketing, around research, about building the fan experience. And that's really begun to pay off. And you can see, the leverage is down because of our free cash flow. We've just cut a new deal with the FIA, the regulator, that'll set forth, we think, better on-track performance that equalizes some of the payments. All of that's going to be to the benefit. I believe Formula One is poised for success.
Why?
Well, because we're seeing growth in fan interest. We've seen attendance up. We've seen viewership up. We've stabilized and set forward a much better regime going forward to make it more compelling than it already is. We see opportunities to monetize it better. I'm excited.
You're excited about the future for Formula One.
Absolutely.
At this point. And Chase Carey, he's planning on staying with the company for the foreseeable future as the CEO?
For as long as I can keep him.
As long as how about yourself? You've been doing this for a long time as well.
Can't get another job.
No, you can't find another one.
No, if you got any ideas.
I don't know. Is Malone going to keep you around? I assume he will.
Did you ask him? He was on the list. You should have asked him.
Yeah, I didn't ask him that as well. All right, the Atlanta Braves, another thing people may not realize.
Better than the Mets, again.
Oh, yeah. Although the Mets did not have a bad season.
Yeah, that's true, if you don't mind not
winning.
Braves
had a great season.
Yeah.
Unfortunately, it ended very early.
It did? Well, wait a minute. But you, Mr. Mets fan, don't even go there.
I really don't like the Braves. I'm sorry.
I understand. I really don't like the Mets.
I don't blame you. You own the stadium, too. What are the trends there that you're seeing? I mean, are you going to have to spend even more in free agency to make that last leap into the World Series?
Well, we're well set up, as you know, with great young talent. Ronald Acuna Jr., Albies, obviously Freddie Freeman. But in addition, we just signed Will Smith, probably the best reliever in baseball. We're going to spend some money. We have relative freedom under the cap and in our payroll compared to most people, including the Mets.
Okay, we'll move through the portfolio. iHeartRadio, passive investment. You guys owned the debt. They came out of bankruptcy. Is that something you could see, though, taking control of?
We have no plan or intent on that today. We look at the radio business, terrestrial radio business, as being interesting. Have a lot of respect for what Bob Pittman and Rich Blessler are doing there. So we'll watch. Just
going to keep watching? I mean, every so often you hear things, well, the Liberty guys might get more active here. What are you watching? Like, what are you actually...
Their performance, how that market trends. Some people think terrestrial radio is going to slide the way linear video has. Others think, including Mr. Pittman and Mr. Bressler, they've got a great future. We'll watch.
How do you view it?
Well, we own 4.8%, so we're rooting for them.
Right, but you have a pretty darn good view, given Pandora and Sirius, in terms of the way audio is distributed around the world, or certainly in this country.
They have a big funnel that's very interesting.
A big funnel?
Yeah, a lot of users, a lot of listeners.
What do you guys own, by the way?
What do you mean?
What's your economic?
Just under 5%.
Just under 5. No, speaking of very small, you can look at your watch.
I was wanting to know what time I was.
What's the problem?
You got places to be.
Got to run somewhere?
I got an investor day to do.
Yeah, it's all right. You can just wait a second. Speaking of small positions, you guys still own a little bit of Viacom.
Yeah.
Why not get rid of the rest of that?
Well, we'll see.
Did you wait too long? Should you have sold it early?
Yeah, absolutely. Yeah. We missed the window, but no, we're fine.
By the way, Malone's not doing you any favors. He was not particularly positive on the prospects for the company. How about you?
I think the stock has performed less well than we thought it would under the merger conditions. Yeah.
Why did you think it would perform better?
There are synergies between the two businesses, and we thought it would trade better than it had. We were wrong.
Right. And finally, back to the big picture. You said a year ago you presented on what the future of why scripted television is not necessarily the way to go.
Yeah.
Or, do you still feel that way?
Only more so. I think we're here a year later. The OTT players, over-the-top players, are going to put a big hurt on linear television, and they're going to put a big hurt on each other. It's somewhat of a circular firing squad.
I know. So when does it end? When do content prices start to rationalize?
It's only going to end when these large players, some of them decide to reduce or not give up, but reduce their efforts. I don't see that happening for several years. The winner here is the viewer. They're getting an unbelievable amount of content, probably too much. No one can consume it all, but they're getting a lot of inexpensive content.